Hi guys, my name is Bet. It's a new year in 2024. So this year I'm going to spend most of my energy in my forex trading, and I have become the forex swing trader because it suits my lifestyle much better. Before that, I used to be a day trader, and I took a whole year to I quit my job and took a whole year to day trade, and unfortunately, it didn't work out. Um, staying whole night, it wasn't really ideal for me. So that's why I became a swing trader. Ideally, I will spend less than 1 hour per day behind the computer, and I'll execute my trends. I have done my research. I got my trading plan. I got my journaling, and let's see how it works out in 2024. Okay, so today let's dive into analyzing the market, and let's plan our trades for tomorrow. And if there is a really good opportunity, let's execute swing trades today, guys. Okay, now I swing trade the major USD pairs, and as you can see, first I always take a look at the dollar index, and essentially I'm going to bet on either dollar is strengthening or weakening. Then I'm going to go through each one of these major dollar pair and trade a pair that corresponds to the weakness or strength of the dollar index. Okay. Now we are looking at the dollar index. As we can see, we have our in 4 hour chart, we have our 89 period moving average going on. So I identify trend as the fact that if there are at least 10 consecutive candles closed below the moving average, then I will take the trend as a down, the meaning that dollar is the weakening and the vice versa. And as you guys know here, 89 89 period moving averages breached up, but as you can see, there's only 1, 2, 3, 4 candles. So market likes to fake out, so it doesn't count as uptrend currently. So it will I need at least 10 candles closed above the moving average to consider the uptrend. So my assumption is that the market likes to fake out, and it will continue to go down, like that. Continue to go down like that. So now let's classify it as trend down. Right now it's faking out. The market likes to fake out, down, fake out, down, fake out, right? Okay, now I'm gonna search through all of the major USD pairs that will corresponds to the fact that dollar is weakening. Okay. Now let's take a look at USD Japan yen. You see, we see very nice that downtrends going up and down like this, and still I assume it will continue to go down like this. So now if the fact that dollar is the weakening is still true, the market is faking out, then USD Japan yen is nicely corresponds to that factor. So I assume USD Japan yen it's also faking out. Then I assume it will starts to go down like that. Then it will retrace. That's when I like to trade, and it will continue go down like that. So I assume it will have the movement like that. So let's see how it turns out. And today is the first week of the new year, and also on Friday we have non-farm payroll employment big news. So I just want to observe the market. So if the market is truly faking out and dollar is continue to weaken, so I will expect this kind of price action on USD Japan yen. You see, then one of my entry rule is that I like to trade once I identify a trend, and I like to enter an elegant entry for that. So if it truly dollar is weakening, it should go down like this. Then at some point it has to retrace. Then on the retracement, I'll try to capture the good entry for take profit. Okay, so that's the USD Japan yen, and also let's do that. Down, trend was down. It was also faking out. When I say fake out, I mean that, you see, we have our 89 period moving average. Market is pretending pretends like it's closing few candles up the moving average, like trying to fake that the trend is reversed. But in forex markets, usually trend is not reversed. Market likes to fake out, so it will close few candles up in here, and it will continue to return to original trend. So that's what I mean when I say fake out. Okay, now let's take a look at the USD Canada dollar. You see there is still few candles, and this price action nicely matches the fact that dollar index is faking out. So I also assume the price action like that for the next several days. So USD Canada dollar is also down. USD Canada dollar is also down. The meaning that US dollar is weakening overall, and also it's faking out currently. Current status is. Okay. And the one factor I like to keep in mind is that I take profit on the Fibonacci extensions, right? For the Fibonacci extensions to work, these wave sides, up and down wave sides, it cannot be too small, or it cannot be too big. If it's too big like this, it's really rare that Fibonacci will market will behave in such a big wave that it will reach the 1.61. So it's too big in this case. So it has to be small. It can't be too big, or it can't be too small. If it's too small, it could be a part of the retracement, and it's really Fibonacci's drawn on this retracement waves are not accurate. You have to find a directional wave with the proper length, then Fibonacci extension will work out. So in the USD Japan yen, the last leg down is actually not that bad. So I will put it as a nice, meaning that it's not too small or not too big. Here USD Canada dollar, USD Canada dollar, and you see the last directional wave is just too big. You see, it's just compared to the history, it seems too big. So there's no way. It's really rare that market will extend all the way into 1.618 here. So that's why what I mean when I say leg is too big. Okay. Now let's analyze the USD Schweizer franc. You see again the last directional wave is too big. So I don't expect the markets to reach to fall down like this. It's just too much movement, and too much movement to expect from a market. So it's just you see the last directional wave is too big, and to reach the Fibonacci extension, the next wave has to be that much big. It's just unrealistic, guys. So what I expect is that if the dollar is continue to weaken against the Schweizer franc, I expect it will start go down, then some retracement, then it will start to go down, and let's say if it's really going to. So on these retracements, I'm going to enter my sell trades. I would like to again, I would like to identify a trend in the market. Then I pick an elegant entry to that trend. Just because I see that trend is going up or down, I don't jump into immediately. I need an elegant entry to get into trade. Okay. Again, USD shifts franc. In this case, the market is not faking out. It hasn't even reached the moving average, right? So here in this case, I will just put down. The leg was too big. Okay. Now let's analyze the pound USD. Okay. So what is the last directional wave? So we have up, down, up, down, up, down, up, down. It's still nicely going on, right? So the last directional wave I'm seeing is that here. After that, the market is kind of retracing. Here we have about 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 candles closes so far. So at this point, pound USD trend may be reversed. So if the dollar, in the dollar index, we saw that dollar is weakening overall, right? It's just for that to happen, and market has to immediately go up here and get closer above the moving average. So but here we have 1, 2, 3, 4, about the 9 candles, almost the 10 candles closer below the moving average, the meaning that the dollar may be strengthening against the pound. You see, like the story pound USD is telling is not matching the overall story of the dollar index, right? In this case, we have a conflict. So if there is a conflict, I don't trend. I need a clear signal for the trend to trade. But still, we need the one more candle. But at this point, for the pound USD, it's almost like a conflicting information, right? So here I will check in a few hours again how this candle is closed. But at this point, it's really a conflicting information. So here, pound USD, last directional wave is not too big, not too small. It's a nice. After that, retracement waves are continuing. So I'll just put it's at this point it is still not 10 candle. So pound USD trend is up, the meaning that USD is weakening against the pound, but up. It was still a fake out phase, but it was a 9 candle, almost a 10 candle. So I'm gonna just put a question mark on that. Okay. Nice. But here it's the conflicting information, right? So I'll just put the conflicting. Then that means that until I get the absolutely confident on the trend in the pairs and also dollar index, I'm not gonna trade. So I will not trade in pound USD for a while, for a few days. Okay, how about euro USD? Here the last directional wave was this, up and down. Yeah, it's how many candles we close it below the moving average? 1, 2, 3, 4, 5, 6, 7, 8, 9. So far, 8 candles have been closed below the moving average. The meaning that euro is USD is getting stronger against the euro, right? but it is still not 10 candles, so it is still in a fake out phase, but it can easily turn into trend reversal if we see 10 candles close it below the moving average. So far we have the 8 candles here, so I'll just, it is technically, it is still considered the uptrend. It's faking out, but it can, with the 1 or 2 candles, it can reverse. So that's why I put the question marks there. Okay. The last directional wave length is nice. I will just put the conflicting. Well, technically it's not it's not conflicting yet, so I'll just put a question mark on that. Okay. Now let's analyze the Australian dollar USD. Australian dollar USD. Again, the market is faking out here. It is still not 10 candles. 1, 2, 3, 4 candles are closer below the moving average. It is still not sufficient for the trend reversal, so it is just faking out here. So I assume. So if the dollar continues to weaken, so I will expect a price action like that. I will expect a price action like that. Let's see if it corresponds to that. If it's really a fake out, it should quickly return to the original trend soon in a few candles. Okay, so the last directional wave length is here. It is still seems big wave. You see, compared to the other directional waves, it is still seems a little bit big. So it's really hard to imagine. Well, actually, it's not that big, but it's still bigger than the ideal. So it's probably, it will reach the 1.618. I don't know. It really depends on how the next wave will unfold. Okay. So now, again, if the overall dollar index is going down and if the dollar is still weakening, so I will expect the price behavior like this. So here, it is still up, still fake out phase. Technically, it is still faking out. Fake out. It was just leg was okay, not the ideal. Okay. 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 Now let's analyze the New Zealand USD. It's the same story with the Australian dollar USD. They look very similar. Okay. But here in this case, you see nice up and down moves. Up, down, up, down, up, down, up, down, up, down. If dollar is again continue to, it is doing the fake out. Still doing the fake out. If the dollar against to weaken overall, so I will expect a price behavior like this. Price behavior like this. Okay. Up, fake out. Okay. All right, guys. So now overall looking at that, we are overall the dollar is weakening against all the pairs, right? If now currently all the candles price actions are not sufficient to conclude that trend has reversed, meaning that dollar will start strengthening. We don't have the sufficient confirmation for that. So I assume that Forex pairs are mostly the faking out. I assume it will return to the original trend. But for pound USD and euro USD, they are really close to the 10 candles. They are really close to the trend reversal. So at this point, the best decision I could make is that just to wait few days, wait about 10 candles, or wait about like a 5 candles overall, and see the clear distinction, see the clear to gather the fact that either the market is really faking out here, meaning that it will return to the original, or is it really trend is reversed. So if it's still faking out and it is still in the down direction, the meaning that dollar will continue to weaken, I expect some price actions for USD, for all these pairs, right? USD Canada, USD Swiss franc, and we expect all this yellow price action. So if it really turns out that way, once it retraces and gets into the good zone, we will start selling US dollar. Okay. Now now at this point, I just have to wait. I don't have to make any trade. I'll just have to wait for the extra few candles for the confirmation of the dollar direction. Then I'll start trading. So if you are eager to trade right now, so the best offer I can give is that for USD Japan yen, leg is very nice. For pound and euro USD, we have the conflicting information. So what I can from here is that if you really want to trade, the best trade you can take is the USD Japan yen right now. You see, the last directional wave is not too big, not too small, and at this point it's likely to reach the 1.61 extension. If the current trend is still there and market is faking out, USD Japan yen will likely to reach 1.37, 35. Okay, but I just want to be extra careful. And if it's really this scenario, market usually always like to zigzag. So I expect some price action like this. It will continue to go down, retrace, and go down. And on this retracement, I will try to capture the downtrend. Okay, guys. I hope this video makes sense, and let's see you guys on tomorrow, and let's see how the market unfolds. So usually I read the market correctly and 70% of the time, but it's still good time. Nothing is 100% in trading world. It's all about the probability. You see, these 4 candles here so far, maybe it could be the beginning of the trend reversal, which eventually will lead like this, or it could be a fake out, and return to the original trend like this, right? Who knows? Nobody knows. It's all about probability. But overall, it's not easy for the trend to reverse. Usually market likes to fake out. Okay, guys. Thank you, guys. See you guys tomorrow.